Welcome to The Explainer. Today we're doing a technical deep dive into one of the market's hottest stocks, NVIDIA. We're going to go straight to the data and see what story the charts are really telling us right now.
Okay, let's get right into it. If you look at this timeline, you can see NVIDIA has been on an absolute roller coaster. It kicked off the summer down around $171, but then look at the end of July, that massive jump in volume. That's your signal that a ton of investor interest just flooded in. From there, it climbed all the way up to a peak just shy of $200 before pulling back. This is no smooth sail. It's a classic tug-of-war between the bulls and the bears.
So when you see this kind of volatility, even if the general trend is up, you have to ask, right? Is this just short-term noise, or is there a bigger move on the horizon? Where is this stock actually heading, and what are the signals we should be paying attention to?
To really answer that, you can't get lost in the day-to-day chaos. You've got to zoom out. So first things first, we need to understand the big picture. What's the underlying trend that's been driving this whole roller coaster for the last few months? Let's start with a really important number, 144.69. Now, this isn't just some random price. It's the 200-day simple moving average. The best way to think of this is as the stock's long-term center of gravity. It smooths out all the noise over the last 200 trading days, giving us this really stable baseline for its health. And the fact that NVIDIA's current price is way above it, well, that tells us a lot.
And that, right there, that wide gap between today's price and that long-term average, that's the proof of underlying strength. It shows that despite all the daily chop, the long-term story is incredibly positive in the eyes of investors. The foundation here is definitely bullish.
Okay, so, big picture. The trend is strong. Now, let's zoom back in and decode the more immediate signals. We're going to look at the exact same dashboard of indicators that the pros use to get a read on where the stock might be headed tomorrow, next week, and next month.
First up, moving averages. I love this analogy. Think of these as the stock's memory. They help us see past all that daily static and look at the core trend over different periods of time.
Now, this is where it gets really interesting. Look at this breakdown. The short-term, 5-day average is basically hugging the current price. That tells us the stock is kind of treading water in the immediate moment. But check out the medium and long-term averages. The price is just floating well above both of them. For a technical analyst, that is a classic textbook sign of underlying strength.
All right, next up, momentum. We're going to use the RSI, or the Relative Strength Index. This thing basically tells us if a stock is running too hot, what traders call overbought, or if it's running too cold, which is oversold. It's all about the speed of the price moves.
So where is NVIDIA right now? It's clocking in at 57.52. It's not above 70, it's not below 30, it's just hanging out right in the middle, in this neutral zone. This suggests there's no crazy momentum in either direction. There's plenty of room to run either up or down without being considered stretched.
Now let's talk volatility. And for that, we look at Bollinger Bands. These are fantastic. Just imagine them as the riverbanks for a stock's price. Most of the time, the price is just going to flow somewhere down the middle of this channel.
And here's the thing. Right now, NVIDIA's price is pushing right up against the top of that riverbank. And in the world of technicals, that's a bit of a warning flare. It suggests the stock might be getting a little bit expensive, and it could run into some sellers pretty soon. Okay, so let's stack up all the good stuff, the bullish signals. We've got the price way above those key moving averages. We've got a positive signal from another momentum tool called the MACD. And maybe the most compelling thing here, the on-balance volume shows a pattern of accumulation. That's a fancy way of saying it looks like the big money, the institutions, are buying shares.
But it's not all good news. Let's look at the reasons for caution. We just saw the price hitting that upper Bollinger Band, which is a potential red flag. Our momentum gauge, the RSI, is just neutral. It's not screaming buy. And a couple of other indicators are suggesting this current trend might just be losing a little bit of its juice.
So when you put it all together, you've got this mix of positive and cautious signals, right? And what that creates is this classic setup, a price battleground. It's a tug of war, and both the buyers and the sellers have drawn very clear lines in the sand. So think of these levels like a floor and a ceiling. The floor, what we call support, is right around $182. That's where buyers tend to show up. The ceiling, or resistance, is up around $194. That's where sellers often step in. And right now, the stock is just bouncing around between those two levels.
So, based on this battleground, with a super clear floor and a super clear ceiling, the analysis really points to three possible ways this could all play out.
And each one gets triggered when one of those key levels breaks.
Okay, first scenario. The bulls win the fight. If they can push the price and, more importantly, close it above that $194 ceiling, then the path looks pretty clear for a run back to that recent high near $195 and maybe even higher from there.
Scenario 2. The bears take over. If sellers push the price down through that floor at around 182, the technical suggests we could see a pretty fast drop. The next major safety net, the next support level, isn't until all the way down around $171.
And the third way this could go? A stalemate. Neither side gets the upper hand. The stock just keeps chopping back and forth between that floor and ceiling, basically moving sideways while the market tries to figure out what to do next. Okay, so we've looked at the long-term trend, we've looked at the short-term signals, we've looked at the three possible scenarios. So what does it all actually mean? What is the big takeaway from all this?
The bottom line from the analysis is pretty clear. The big picture looks really strong, but the short-term picture is basically a waiting game. Everything, and I mean everything, hinges on whether the price can break that 1940 ceiling to keep going up, or if it breaks the 182 floor, which would signal a pullback. And that really leaves us with the final question. And it's a question for you. Look, this kind of analysis isn't about having a crystal ball to predict the future. It's about understanding the battlefield. It's about knowing where the lines are drawn. So the real question is, knowing the potential rewards and knowing the clear risks, how do you want to manage that?